Have a good morning, ladies and gentlemen. Hope you guys are good. Happy to have everyone on board for our morning class. And we're a little bit late, but better late than never. At least we're going to do something. So just stay put and we see how we go through today's lesson. Coach Musa, your trainer for today as well. And we're going to pick up from where we left yesterday. And just like I told you yesterday, that today we are going to see how we can actually identify trading opportunities in a rising market, and then also take some profit in a rising market. Most of the times, it is a common scenario that we get excited when the markets begin pumping, and especially on specific coins that may be pumping crazily. There's a tendency of a trader getting so excited and not fearing to miss out, fearing to miss out on some of those profits that they will realize when they make entry in such coins that are pumping. It's not a bad thing, because as a trader, the major goal is to make profit. And it is true that even in pumping coin, most of the times you can get the most out of it. But in most cases, sometimes we end up being trapped, probably maybe because of excitement, probably maybe because we think that the market price will continue rising or that direction forever. We can't tell when it's gonna stop or at what price level it is most likely going to stop. So sometimes we enter blindly. And because of that, we get trapped. So it's very important for us to know, I think, our limits as to how much we take in, what time to always be to jump in the market, and probably when to stay away. It is a common scenario that as traders, sometimes we think, okay, that because we have the capital available or we have the funds available, we see it there seated on our sports wallet. We just feel like it should not just sit there, it should be doing something, which is very okay. But we sometimes don't accept the fact that it is not a do or die. Sometimes it is very important. Let the funds be there. If you find a scenario where the market is really not normal, let me use that word, like the market is really not okay and may not most likely go in your favor, or it is just in a bearish state, or it is just in a state of consolidation. There's no clear path whatsoever or sign that it's about to rise. It is very important. Just relax on that. Let the available fund remain. There are moments that the market will be okay. Those are the times you can really trade. Unless otherwise, you really feel that it's a do or die, it is a must that you have to just be trading every now and then, every day, then maybe you may go that direction. But as for me, as For me, I always advise. It's an advice. It's a matter of taking it and leaving it. But I always recommend that if you find a time where the market is really not okay, every time, every coin you enter, you find yourself floating. Every coin you enter, you find, go into a floating loss. You fast reduce the pressure on yourself. Relax. Okay? Relax until the market stabilizes. Then you carry on. Okay? Other than you going and then everything gets into floating loss and you don't have any reserve to benefit from any eventuality of a market, of a market normalization. So it's a common scenario we tend to have so much, very, very much, which is something that I think we could do, try to readjust ourselves to and make it happen. Okay? Yeah, make it really happen. Because otherwise it sometimes becomes I am speaking this out of experience. Okay. If you're purely gonna be a trader, those moments where the market is not okay, if you do both, like you have royalty and then you love sharing, okay, you go ahead and share. First, relax about the market. Go and share about the opportunity to friends, to family. Let them, come on board. Do the aspect of the sharing, of the marketing, and relax. When the market stabilizes, you resume your trading. Okay? Literally, we have Royal Kick presenting both opportunity trading to earn some daily profits and then also some quantification, activation bonuses, and so much more of those other benefits that are related to the Royal Q compensation plan. So don't make it a do or die, that it is a must. You just have to do it. We don't have power over the market at times. So if it doesn't go in our favor, we relax. Okay? Let the smart money take, if let them do whatever they want to do in the market, and then when it bounces in our favor, then we are good. Okay. Yeah. So that is a point I needed to first make as we proceed through this class, so that whoever can capture that and try to use that is better. Otherwise, as for me, I only stop at advising. The rest of the decisions on how you're going to go about it, it's entirely vested in you. Yeah. So I hope that point is taken for whoever feels it is necessary that they can use. I hope I'm audible enough. Yeah. I hope I'm audible enough. I hope my network is clear. And if it is, let me just get a quick feedback through the message. Just say yes if everything is clear, so that we move on. Okay. So we're good to start then. So let me share my screen. Move on. All right. So today let's look at we're going to look at we're going to look at a rising market trend. Why a rising market trend? Why we must draw our trend lines or identify price reaction points in an attempt to monitor the market. Okay. So we're going to look at the reasons why we need to also identify or locate and then draw or capture our areas of price reaction in the course of a rising market. Why that is very important. And there are basically 2 to 3 reasons why it's very important for us to equally identify and capture the areas of price reaction in a rising market. The first reason is to identify trade entry opportunities that be there. Okay. It is to identify entry opportunity. Okay, that's basically the first reason. The second reason as to why it is very vital for you to mark these areas of price reaction in the course of a rising trend is to monitor how far that rise is gonna go. Okay, because as we said, in the market, what makes us the profit, what enables us to trade is the volatility. That aspect of the market price rising and dropping or rising and falling is what helps us to make the money. As sports trader, our aim is to buy low, okay, and then sell high. Or we can buy high and sell highest, right? So if that is true, then monitoring an uptrend would help us a great deal. As we said, it will help us to see or envisage how far the market price is going to continue rising. Okay, it's just for purposes of monitoring how far the price is going to rise. And in so doing that, the third reason comes in that it will enable us identify the possible trend reversal price levels on the market or in the chart. At least it can help us gauge the most likely price levels where the market price is likely to reverse to the downside. Remember, we are monitoring a rising market, right? So the third reason basically is to identify possible price reversal areas of price level. Okay. And once that happens, then we're good to go. It makes us decide what next to do. Now, remember, when you're monitoring this, there are signals, there are things that we look up to identify the price reversal areas or level. The things that once happen, we can tell that indeed there is a shift in the market structure. The price is now reversing to the downside. All right. And also in the course of monitoring the market price rise, we are also able to tell through certain events that when they happen, we're able to tell that this trend is still going to continue. So in the course of monitoring, we shall be knowing that the trend is either continuing or it has come to an end and it's about to shift direction. Okay. So if the trend is continuing, definitely we shall be in position to still continue looking out for those entry opportunities, and then we take advantage of still the rising market or the momentum that is still in the market. Okay. So I'm going to demonstrate something. I'm going to do this before I come on the chart. Now, I'm going to put still a scenario before we go on the chart. We have a rising market scenario like this. Okay. So we're going to give it a scenario like this. Now, let's take it for instance that this is a rising market structure. And we want to identify those possible price reaction levels. Now, in a rising market, we said the other time that it's characterized by higher high, it's characterized by higher highs and then higher lows. All right. So the higher highs and the higher lows actually is what forms the price reaction levels in a rising market. Now, if that is true, then that means that if we are to identify where these higher highs and higher lows are, we're going to mark them and then we draw our line to capture those areas. And mark you need to remember that when you're drawing a trend line, when you're drawing a trend line in a rising market, if you can draw it either as a single line or as a double line. When you're drawing it as a double line, that means you're going to be identifying all the higher highs and connect them with a trend line, then all the higher lows, and then you connect them with a trend line. However, if you're going to decide to only draw one line, then your interest or center of focus should be in identifying the higher lows, all right, and then connecting them through the trend line. Now, why that is very important is because It will help you monitor the rising trend or how far the market price is going to rise. But at the same time, it's going to enable you look out for a possibility of a trend reversal. Because for a trend reversal to be effective, that means the market price will have to come and will have to break below your trend line, which you have drawn on the higher lows. It will have to break through below, retest it, and then it confirms a trend reversal. Okay? So that point, I believe, is very clear. So let's see. If you're going to draw it as a single line, the first step is, like yesterday, we identify our higher lows. And then two, we connect. After identifying, we mark, and then we connect them using a trend line. So let's do that and we see. So in this case, that means our the journey of a rising trend begins with the formation of a lower low, the lowest price registered, and then it accompanies that with a formation of the first higher low. So in this case, if you look through this, that means this would be our higher low, this would be our higher low, that would be our higher low, and that would be equally our higher low. So left to us, we're supposed to link these higher lows together. Now, as you do that, you're going to encounter a scenario where not all this line, not all the higher lows that you're going to identify will actually align with your trend line. Okay? I repeat, not all your higher lows you're going to identify will align with the line that you're going to draw. But the most important thing is identify any two or three that you're going to focus on. Any of them that falls short of that line or below that line, it is absolutely okay. Okay, that shouldn't worry you. So as you do the drawing, ensure that not all these higher lows should be touched by that trend line. Just concentrate on specific specific higher lows. So if you're going to do that, then we can capture this, can decide to pick this and that, okay? And then draw our line and extend it to the future. Or we can decide to capture this, and then, all right? So any of those that will touch, it is okay. So let's try to do that and we see. If I had this as a trend line, I can decide to pick on this, then I connect it to that. Then I just extend it to the future. If it touches, fine. If it doesn't touch, it is okay. All right? It is absolutely very okay. So extending it to the future is for purposes of monitoring how far the trend is going to continue rising. And the farther the trend is going to continue rising is characterized by a continuation of the price trading above the lines that we have drawn. For as long as the candlesticks, okay, maintain themselves above this trend line we have drawn, we can still be good to conclude that the trend is still continuing upward. Okay, so that is what we do when we are actually drawing it as a single line. When you're drawing it as a double line, after drawing our lower line, or after connecting the higher lows together, we also go ahead to identify any two or even just one higher low, because the ones connecting the higher lows, the lines that connects the higher lows is what forms the basis of focus when you're drawing any trend line in a rising market. Now, meaning if that is the case, if that is the foundation, then you can either identify any higher high, okay, any high or two, and connect them. Now, whether you're going to use one or two will depend on the drawing tool you're going to use. If you're going to use a trend line, a single line, then you may have to identify two higher highs. However, if you're going to use a parallel channel to capture these two areas, the higher highs and then the higher lows, then just one higher high is okay for you to have or to come out with a clear ascending channel. All right. So in this case, I am going to use a parallel channel. So if it is a parallel channel I'm going to use, I'll come here on the drawing tool, pick it, which in this case is here. After having connected my my higher lows, I'll just extend it up. Okay. So in this case, my focus is on this higher high. Now, by me identifying that, you realize that this one is a little bit higher, but it is fine. This one is also equal a little bit higher, and it is still okay. Because when I'm drawing this line, I'm always not specifically um, going to rely on a line. I'm looking at an area. It's basically an area. It's just like you putting a magnet. The magnet, the two, unlike poles, do not necessarily have to be in contact for them to attract one another. All they need to do is they need to be as close as possible, and you'll see them pulling. Same applies to when you go to the like poles. You don't need them to be together for them to repel each other. In other words, as long as you bring them close and they experience that power, they experience the area, they call them the electromagnetic fields. Whenever they come across the electromagnetic fields that causes that repulsion force, definitely they're going to be pushed aside. So in the same thing here, it doesn't necessarily have to be exactly on the line. The candle will not have to exactly be on the line for you to call it a price reaction point or level. It may just come close to it and then it reacts. Okay. So it's a common thing you're going to see when you go on the chart, that it doesn't necessarily have to exactly touch that spot, but sometimes it may just come close, or sometimes it may just go above it slightly or below it slightly. All right. So that is very important for you to note. So this is how our ascending channel will look like. So by so doing that, we are actually monitoring how the price is trading within this channel as it is rising. Okay. So that is how you'll be drawing that. And the interest is to monitor. Now, the line that you have drawn connecting the higher highs is actually the support line. It becomes the support. And then that line which you have drawn connecting all the higher highs is what we would refer to as the resistance line. So in other words, you can as well draw a resistance and a support line diagonally in a rising market, just like you would do in a dropping or a falling market. Okay? Just like we saw yesterday in that more of a ranging market. So it's very important for you to know that. Now, if that is captured and it is very clear, I must bring this note for you to also sink it in. At every point that the market price touches on your support in a rising market, becomes a line or an area of confluence. It becomes an area of confluence. It becomes also an area or a point of price reaction that if you were to draw the trend line horizontally, it will still have to come and react at the same point. So meaning at every spot that the market price touches on your support price, you could equally draw a horizontal line like that, like that, like that. And it becomes more of like an area or a point of confluence. Now, why that is very important is because it enables you to actually measure your TP. All right. And it will also help you measure or establish your margin call drops. Is that clear? Is that clear? Is that clear? Mm. Yeah, it's clear. Point taken. Not yes, no. You'll understand, as we proceed. Okay. So let's go back. So here we are. Um, I'm saying that every point when you have, for example, when you have established a parallel channel, okay, when you establish a parallel channel like this, like we have done, and in this case, it is called an ascending channel because it is capturing a rising market, rising market, yeah, market price, in other words. So if you draw an ascending channel like this, every point that the candlestick will touch on these lines, the upper line or band and the lower band, actually becomes your level of price reaction, and you could equally draw a trend line, horizontally, capture them. Like for example, let me just demonstrate. If you have something like this, is you see these points where the price is touching on our ascending channel. I presume you do. So when you have that, if I can draw my trend line, I will have something like that, right? Hmm? I would have something like that, right? Hmm? Something like that. I would also have something like that. I don't know whether that is making sense. It becomes more of a point that from this you realize that almost when the price reverses and touches on the support, the next movement in the quest to break structure or to break the previous resistance established, okay? Because in this case here, this is our resistance. And then it's both a resistance on a rise on the channel and also horizontally because of the line we've drawn. Now, should the next move or momentum build up in an attempt to go and break this previous resistance, the next most likely resistance level that it is going to encounter will be resistance 2. Is that true? Yes, it is true. So meaning if it breaks structure at this price level, it's gonna come and encounter resistance at resistance 2. Now, if the resistance is successful, expect a retracement, right? A pullback. And this pullback would be towards this previous resistance that was broken. It will be towards the previous resistance that was broken. And in this case, is this where you realize that as it is pulling back, it will pull back and either stop along this support or sometimes it may dip slightly below this ascending support and it comes exactly and reacts at this same level where it previously broke. From there, it then gathers momentum to make the next move again to go and break resistance 2. Once it breaks out at resistance 2, expect a resistance 3 being the possible price rejection level. Meaning, as it approaches that, expect another pullback towards resistance 2, which now will turn out to be a support. if at all it supports the price successfully. Okay? So that will continue like that for as long as the price is maintained that uptrend. Now, for you as a trader, if you want to make entries, you'll make entries and in two scenarios. One, at a support level, okay? Or you wait for when the market price breaks the previous resistance and encounters the resistance at 2. As it is pulling back, you can preset around there, around this channel, around the support, around the support. Once it breaks and then it pulls back, you set your preset around that. So this one becomes your support or entry price levels. Okay? That is if you want to trade in a rising market. Does that make sense? I want to go to the chart now. Does it make sense? Ayabas. Ayabas. Okay. Yeah. You will understand probably. These classes are repeated, and probably maybe in the next cycle, another leader could be there on board to repeat. You'll understand maybe better when the next leader comes on to try to explain it. Yeah, because it is a repeated class. I may run through maybe this week, and if I'm through with what I was supposed to share with you, then another leader will come and take you through. Yeah, but I think yeah, we still have a long way to go, probably. Yeah, so you take it nice and slow, okay? You'll get it. Maybe you'll understand when I now demonstrate it on the chat, on the chat now. The other one was just a demonstration to paint a picture, okay, on what happens. So let's come back here. Reality, let's come to the real chart. I'm gonna take this movement as a rising market structure. Pay attention to what we're gonna do. So here, this market price previously was on a downtrend, as we can ascertain by that movement, and then it established the last lower low there. So that was our last swing low. And then we had a trend reversal to the upside. And we're still experiencing that unless otherwise. But we see the trend is rising. So I want us to draw our trend line in this rising market price and then see possibly how we can make entry and where we would exit from and how we can establish the margin call drops just in case of to help us in case the market price eventually goes against us. Okay. Okay. So in this case, this is our first higher low. This is our second higher low. We will not count this as a higher low yet because it is work in progress. There's a candle still building up and it is 11 minutes left for it to close successfully. Maybe if the next candle picks up and, the next candle is a bullish candle, then we can tell that this is a confirmed higher low. But because it is still on process, we will not count it. So our consideration will be entirely on these two. Okay? Shall ignore that for now. So we're going to draw our trend line as a single line. So I'm going to pick this and put on my first higher low and I connect it to the second higher low. And then I just push it to the future. I'm interested in it touching only the two key points. There. Okay. All right. Yeah. Yeah. So that is it. You can have connected my two higher lows. Now, you can as well, if you so wish, after having identified that last swing low that was from the lower low that was established, you can actually also form it as the basis of from where you're going to draw this trend line. It is still okay. Now, if that is the case, that means I'll shift this line and my concentration will be on this first higher low and that lower low established. That is one way. So let me see if I was to use that. Let me draw it this. Let me pull it back here and let me put it there. This is how it will appear. Okay? Oh, is it? It has not yet touched. It has not yet touched. So see, just put it there. And then I put this there. Has it touched? Yeah, it has. So the trend reversal point becomes my starting point. Then we have the first higher low established. So this line is going to form the basis of monitoring how far the market price is going to rise. Right? Yes. So now, if that is true, then that is good. Actually, the best way of doing that is if you can capture from that swing low, it would bring out, the best of the parallel channel. So that is how you do that, and then you just extend it to the future. So your interest is to see if at all the market price dips, okay, and approaches your support line. What happens? Does it support the price? And in which case, if it does the price reverse and it is pushed upward? If it is true, then that is good. The next time it comes again, once this price level supports it and it goes up, we are already in a rising market price. So the price is rising progressively over a period of time. So we can trade this movement. Okay. So that is that. So this is our trend line. So we have used a single line. Okay. Now, if you want to use a parallel channel, then as I said, if you're going to use a parallel channel to identify, to draw this, you only need one higher high, a well-established higher high, and that's what you're going to base on. Then you now leave the rest to fare out as it will. And your purpose will only be to monitor, identify entry opportunities, set, trade, exit, just like that. So in this case, we have two higher lows. Higher highs. There's the first one here and the second one here. And I'm going to go for this. So let's do that. Let's pick and extend and put it just at that point. And here is our parallel channel. Now, the beauty about the parallel channel is that it establishes three lines. Each of them, or all of them, actually helping a lot in monitoring of the market price rise. Okay, all of them are actually support and resistance, right? All of them are support and resistance. They act as support and they act as resistance, depending on where the market price will be at that time. Whenever the market price is above any line, the lower line becomes the support. But whenever the price is below any line, a trend line, then that line becomes a resistance. So in this case, we have three lines, okay, that we find in the parallel channel, and that is the beauty about it. It establishes three lines. These three lines all help in supporting. Now, the unfortunate bit is here in the default settings, the middle line is appearing as a dotted line, but it's not dotted. It's a powerful trend line as well, okay? Because just in a small movement that we have captured, we realize that when the market price dropped to this level and started moving upward, that dotted line was a strong resistance line. It presented a strong rejection force, okay? And of course, the market price couldn't help that drop down to gather momentum and finally had to break. So if you look at that movement, if you're to monitor that movement from here, when the price dropped to this level, it tried to rise and it got rejected by the middle line. Right? So the middle line was a strong resistance. Then it had to drop back to the support. And then the momentum was gathered to go and break that middle line. And the next resistance level was the upper line. And then it had to dip to the very same level, though there was an overlap a little bit. This middle line had to, at last, successfully support this price, right? It came to that point, it rose back, it did not touch the upper one, and it is now here. Got supported again, and now it is on the verge of making that movement. You see that small movement that has been captured? Very important. And the effect of a support, and you see this candlestick. Now, this is a bullish engulfing candle. It's a very sure bullish signal that you can even enter at any point here now, because the support was actually confirmed. So here you can enter even at current price and take profit to this resistance. See that? You take measure, enter current price, take profit to that resistance level, to the upper line. Period. And you're good. Just for purposes of being a little safer, you'll measure from whatever point of entry back to this lower line, okay, this dotted line, for your margin call drop, for the first margin call drop. And you'll still be good, okay? So your work here is done. You have drawn your line. Now what is left is to identify those opportunities, those trade opportunities. Those trade opportunities, okay? And the trade opportunities will happen if the market price drops to this and it is supported. You can make entry, measure that percentage as your TP. For being safe, measure that from whatever point of entry to the support that is below for your margin call drop. That's what you do. Okay, that's what you do. If it drops to this lower support and then the market price is supported successfully, like it happened here, what do? You make entry, take profit to this middle line. You're not going to assume that it's going to break through. Just try to look at the most recent resistance level as your exit point, okay? So you do that continuously. You just make entry at a support and exit at a resistance level. The next opportunity that may be presented, if at all the momentum that is arising from this point results into a break of structure, results into the market price being broken, I mean, the resistance line here being broken, okay? Then another trade entry opportunity will be presented there. And for that to happen, it means what must be here is a green candle has to build up from below your resistance. The next one should confirm by opening and closing above, and then you enter from the next candle open. All right? You enter from the next candle open. Just like, So that is when the breakout happens. When a breakout happens, that's what you do. Okay? You wait for the third candle. That is the breakout candle, there's a confirmation candle, and then that one that now gives you the entry point. All right? So in brief, that's how you go about this. So you leave your channel for as long as you wish. Now, if you leave this channel and you come across a scenario where the market price comes and then breaks below your support, and the break of support will be characterized by a red candle opening from above and closing below. Then a confirmation candle must open below and close below. Then the third one will now confirm for us that downward movement. Just like we said, for a breakout, a green candle must open from below, close above. Another one opens, close above, and then a confirmation, meaning you make entry on the next. It doesn't matter whether there's a breakout here, okay? Okay. So as long as a breakout happens, that's what you do. Wait for a confirmation. You enter on the third candle. As simple as that. Is that okay for everyone now? Is that okay for everyone? Mm-hmm. Mm-hmm. Oh, yeah. So that is it, ladies and gentlemen. I think I'm done for today. I'm done. I don't know. Did Julius, are you there? Who
Sure.
is okay? So I think I'm done for today. We are good unless there's something else you would want to supplement. I think we're good.
Thank you so much. We give some love, heart, some thumbs up for Coach for work well done for the past 3 days. Thank you so much. Uh, I usually say that many times people want to have things learned immediately. But as you keep on attending more classes, the message becomes more clear. It is hard for the message to be more clear once, especially if you are new to such. At times, the message may not be clear, but you just need to keep coming until the message becomes clear. So, thank you so much uh, for, for those amazing insights that uh, uh, you have been able to share with us when we deal with the parallel channel. Just want to throw some confidence about. I've seen many people across the crypto market space worried about the bull run, and many people have asked themselves a lot of questions as when will the bull run start? It has delayed you. The market has not delayed you because most of you are not even prepared enough when it comes to capital. If I would ask a question, how many people here have been able to raise their capital at least to $10,000? Let me see in the chat. Or you think the bull run is going to create the capital for you? Let me see. Oh, yes, we have Akim. Akim has raised to 10,000. Thank you. Alfonso Winnie has raised to 10,000. Beautiful. So if you haven't raised your capital to at least $10,000, this is time for you to take advantage. Okay. The market is giving you an opportunity to position yourself for success. So these issues of where is the burani, it is the one that is going to change my life. Lo, 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 lo. The skills you are learning here, I have said it several times, and I think Coach Musa will play a chart. If you go back to the charts, you'll find that the market is on an uptrend. Coins have not gone back to their lowest prices of 2022. They are just simple retracements that are happening in the market. Markets have not gone back to where we were. If Coach Musa remembers very well the tiers of 2022, if you could throw in some moving averages,
Uh,
you throw in some moving averages, and people could see markets have not gone back to where they were in 2022. Mm. Where tiers were so much and things were not moving in our way.
and Bitcoin dominance is still very high. It is,
Sure.
it's
Bitcoin is
too much.
dominating the market.
It is still dominating the market. I don't know. Let me which coin as an example. those earlier coins, yeah, those earlier. I think even that very same Avax is also an old coin. I think. Where is
Navax
Avax?
is. Solana would
Uh,
paint
yeah. A better picture. Let me see Solana. Yeah, actually, what the confidence would want to put to give these guys is that, you see, at the moment there is a strategic plan. You see, the US is not very stupid. Even amidst them talking about this crypto reserve, in one way or another, the US wants to influence other countries to equally look the same direction. But how they're going to do it, I know, the US is always funny when they're doing their stuff. Yeah. They have not yet even started yet. They have not even started acquiring the Bitcoin. But what they're giving out is the updates of how the reserve may is most likely going to look like. Yeah. So in an attempt to do that, the people asking for the bull run are going to wake up one morning and find that the price has gone, that the price has really gone. You check, this was December 2021, first December, and then this was December 1st, 2022. This, but I think we are not so bad, Leader Julius. The way I'm saying,
not
literally,
at
Solana has picked up. Solana has really picked up almost back. Actually, it even went to almost the previous all-time high and surpassed it. That was in 20, let me see, that was when? So what it is doing is more of a retracement. It's just a retracement. Let me check out this. This was it was this year. No, it was last year. It was Jan 2025. This was when it came to $300. Yes,
uh,
$300. That was this year, just at the start of this year. And what it is doing is, honestly, it's just a retracement. What it is doing is a retracement, because when you see uh, what it is doing is more of a retracement. What Solana is doing is more of a retracement. Probably, if you see there is its price is losing momentum slowly. This is about 16 to this point. Hey, what I see here, if this level supports the price, huh? If this level supports the price, uh, if this level supports this price, we may see something good. We may see something good. If that level supports the price, huh? We may see something good. This is 1 month time frame. This is a 1 month time frame. So if this price level, this support here, this point, if at all this support line successfully supports this price, that is currently coming down, we may see some good movement. Because remember, the previous all-time high was already broken for Solana. So it is not as down as it was in 2022. Because imagine this movement. That was a crazy movement. And at least for Solana. Solana somehow, it came back up to around, was it, let me see, what was the price? It had to drop, imagine, from around 250 something, it had to drop up to
$7.
up to around eight, yeah, roughly around 7 point something, $8. Just imagine that drop. But at the moment, it is here. It is around here. It's around 100 something. So the only thing that we most likely going to see, let me add in some few indicators just to have a picture of if there is a possibility of it being supported. Because what I want to see is there a possibility at what price or what level the market is Solana? Because we should be eyeing at a reversal from this point if it is successfully supported. So if some of this indicator tells us like this one, which I love so much, if it tells us that the market price is within the oversold, then I think we are not so bad. We are not so bad. On the stochastic RSI, we are entering the zone, the demand zone, what literally would call the oversold. And I think by the time we successfully enter this zone and then the crossover, the golden crossover happens, that is when maybe the price would be around here at this support. That is if nothing changes. So that means yeah, it is still dropping. It is still dropping, but we are not very far from approaching our support, which may be around there. But I think we are not so bad, Leader Julius. We're really not bad. We're not so bad as some people may see, but just that the retracement still has to occur. The market price is still gonna drop a little bit before we finally pick up. It may drop still some more. It may drop some more. This price level, I don't know. This price level here. So, Julius, I think you've seen what is happening. You see what is happening? Yeah.
I think it will. It has potential. Bitcoin is
Mm,
still. I believe Bitcoin is still making another retracement
mm.
unless it holds above the 80,000 price. But if it doesn't, then we could see it where you have drawn that parallel channel.
The weekly time frame. Ah, you see, the challenge is we had two liquidity void area that were established. So we may see, because it already dropped to this level. So I think it is going to rise a little. But now the fate of afterwards, what will happen there, will only occur if I think it comes back to this level. Comes back to that zone. That is what will tell. Because at the moment, remember, it had to break away from that zone. To break away from that zone. This zone. So it may have to first pull back to that zone, and we see what happens. We have to come back around there before we see what happens. So people should just hold on. Let's see how the market fares, but it may not be really so long before we can see something good happening in the market. Yeah. May not really be so long. Yeah. So, as you advise, those who can concentrate on adding more capital, let them do so, because just hold on, because now when the market finally begins rising, that will be the time. Okay? Yeah, that would be the time. So concentrate on raising capital, do the sharing of the royalty probably. And when it begins, I think you will know. You will really know. You will know. Yeah. So I think briefly, that is what I would actually supplement on that. The market is not as bad as it was. And still the bull run is there. Remember, if you remember, for those who joined earlier enough, in 2021, the bull run became so crazy beginning from I think the month of um July, August, September, then it went to the peak around November, right? So it's a progressive development. It doesn't just there's one thing that people they think if it is called a bull run year, then once it clocks 2025, it was supposed to start off immediately, which I think that is where some people got it wrong. It is a progressive development, okay? Characterized by, those market correction, surge like that. But over a period of time, you will see it actually breaking the previous market price highs. Like, Bitcoin went to, is it 110? Now, the next movement, it is not very far. 80, 84 is not very far. Okay? It's really not very, 83 is not very far from 110. So the next time you're going to see the movement will go past 110, maybe to something either 120 or 30. Then again, it pulls back. And then, so it is a progressive movement. It's not a linear movement. Yeah. So sometimes you also need to be patient with it. Yeah.
All
Okay. I
right.
think that.
Thank you so much. Thank you so much. But people need to also look at, I usually say that one of the signs that the bull run is inevitable is the progressive, positive policies that are happening around the space, which brings in investor confidence. Okay. Like I shared when the hour was starting, that as long as there is positive policies that are around, it builds investor confidence. Like you see how Trump is doing his best to make sure that the Ukraine-Russia war comes to an end. All this brings positive investor confidence. And once the investor confidence, and when you go to on-chain data analysis, which I think this season we might play part of about, because many of us, we don't look at on-chain, what is happening on the blockchain, because mainly we focus on the transactions that are happening purely on exchanges, look at volumes. But when you go down on volumes, on on-chain data analysis, you find that the big investors or the companies are really putting in a lot of money. The total value locked on different chains is really increasing than it has ever been in the past. Okay, although markets are not surging, but even when you go to on-chain data analysis and look at how transactions are happening on different chains and networks, you find that volumes are going higher than ever before. So all these being looked at positions you that the bull run is inevitable, although you might be needing it immediately. So that's why, like for example, when you look at Solana, you have been analyzing $1,000 is inevitable. It is inevitable. Solana has to go to $1,000. It is because when you look at what is happening on its chain, a lot of transactions happening, a lot of developments happening, a lot of people looking at Solana and producing so many meme coins, so many volumes getting into the Solana chain, then 100%, this is inevitable. The increase of volume on new asset classes like real world assets, you find that a lot of companies are now coming in into real world assets. They're built on the power to get whatever is in the physical world to appear in on-chain data. All this is playing for the benefit. The decision of the United States of America to look into the idea of putting their data onto a blockchain to ease Americans look at what is happening in their country and what is not. This is very key. So, as someone who is in the crypto market space, many people usually say they overestimate what they could do in a short term, and they overestimate what they could do in a short term, and they underestimate what they could do in a long term. I usually used myself as an evidence that when I got started in this journey, if I had decided to say that I wanted to be successful very fast, then I would have quit. But when I looked down into what am I involving myself into, when I took a long-term picture, like 10 years from now, I usually say we started in 2021. If you add 10 years from 2021, that will be 2031. That would be 10 years in the crypto market space. My friend, if you don't take note, many people here, some will be billionaires, some will be millionaires, but even some people will be broke. I know people don't like that, but some people will be broke, not because they they have not been around, but they underestimate what could happen to them in the long term, and they overestimate what
Hey, I think he could have gotten a call. So yeah, but that was a good nugget. But I think he might have his network might have been interrupted either by call or something. I don't know if you come back to conclude, but generally, what I will only want to share with us as I build up on what he was saying is that let's we know what is happening around. There is a lot of positivity in the crypto space. Okay, a lot of things were going on here and there, wars, and then so all this, just like you said, is somehow trying to affect the market. But if the world kind of stabilizes, and people concentrate and focus on business, I think that's when the market is gonna come out, because there's a lot of things putting a shadow on some of these policies that are coming up. But if all this could stabilize, I think things are gonna work out better. Things are going to be very okay, because everyone will be calm, and then yeah, people will engage in serious business now, other than, fighting wars here and there, policies coming in and affecting some other people. Some countries will have to sell off, especially for countries that maybe would had like Bitcoin, say, for example, will have to sell off to get some fund, because too much restriction, too much sanctions, a lot of things. So they have to survive. So if they had a little bit of a reserve where they were holding certain assets, they would have to get rid of part, and that affects the market in a way. Okay, so it is just a lot going on, but the positivity is there are a lot of positive policies that are coming up in favor of crypto, and especially with US being being on the driving seat. I think we are good. There's more light. There's a better light at the end of the tunnel. There's something better building up. If it were US that was against whatever policy that was being formulated by other countries with regards to crypto, then we would be more worried. So there's a lot of positivity, really a lot of positivity. All we require is to just be patient. Let's play along. Okay, let's just play around. Let's be a little bit patient. Let's learn. Let's just have this moment of enriching ourselves with some knowledge, with some skills, and prepare for such moments. Because I assure you, when the bull run comes, you should not forget that we shall have a bear season as well. That bear season will as well come. So this is giving you an ample time to probably prepare for such an eventuality, because you're here to stay, remember? You're not here to quit, or you're not only here for bull run. And once it happens and you're out. No, it's a continuous journey that we are in, because crypto is here to stay after all. So for as long as you're already in the space and your intention is to amass some wealth and, and build something for yourself, look at it long term, because the next bull run will happen in around 2030. If it finds when you're alive, that is another experience. So you'll have an experiential journey through the bull run of this year, or for those who started 2021, the bull run of 2021 through the bull run of 2025. Then you go to the 2030. It will be an experiential journey in the crypto space. That through that alone, the skill and knowledge you would have acquired, some things will not be news for you now when they begin. You'll have that confidence that, you know what, that happened before and it shall equally pass. So it's just a matter of being patient and focused. Ladies and gentlemen, I think with those few remarks, I would wish to. Okay, somebody's hand is up. I don't know. Okay, normally I don't do that. Yeah, but let me give you a chance. Probably there's something important. Yes, crypto winners. I'm seeing your
Good
hand is
morning.
up.
Good morning, sir.
Good morning.
Thank you for your training was amazing and wonderful. One thing I'd like you to help me. I was trying to draw the trend as you were, but I can't really get what the application as you were using, because when I'm using in a trading view, getting the one which is what drawing with numbers, Elliot impulse, Elliot triangle, but it drawings with
Okay.
numbers.
Okay, I get. Now you wanted the drawing tools. How to get the
Yeah.
drawing tools? Yeah. I think it's what we'll start on probably tomorrow for those who may be there. So if you're there tomorrow,
Oh,
we shall just have a little insight on it. Yeah.
okay. Thank you, sir.
Okay. I think we are good. Should we call it a? I think you'll have to join the next class. I don't know who's gonna run through, but yeah, see you guys tomorrow, God's willing. And yeah, try out some of the things that we share. But what I give you as a last remark is Let's be patient, okay? We are already here. We are here to stay. So exercise a little patience with the market as well. Okay? Yeah. All right. Blessed day. Have a good day and good morning.